Welcome to Earnings Recap. Today we're covering Applied Materials earnings report and call. And actually, before we even dive into the numbers, something pretty interesting. They mentioned they're building this brand new flagship R&D place, the EPIC Center.
Oh, yeah, the EPIC Center right here in Silicon Valley.
Yes.
Supposed to get going in, spring 2026?
That's the plan. So today we're going to break down their latest earnings, pull out the key takeaways in plain English for you.
Exactly. The goal is to get a handle on how Applied Materials did financially, what they're seeing coming up in the market, and, what their strategy looks like going forward.
Right, and we're digging into their Q2, that's for fiscal year 2025, earnings release and the call transcript.
Got it.
So let's kick off with how they actually performed. Q2 FY25. The big story seems to be growth, right?
Yeah, definitely. Revenue hit $7.1 billion. That's up a solid 7% from the same time last year.
Which is pretty good, especially when everyone keeps talking about this dynamic macro environment. Just some strength there.
Absolutely. And looking at profitability, the gross margin numbers are, quite impressive.
Oh, yeah.
GAAP was 49.1%. Non-GAAP hit 49.2%. Both of those are up 1.7 points year over year.
Wow, 1.7 points is a nice bump.
It is. And get this, that non-GAAP number, it's their highest quarterly gross margin since way back in fiscal year 2000.
Since 2000? Seriously, what drove that?
Mostly a better product mix, selling more of their higher margin stuff, basically, and a good mix across their business segments, too. Seems like demand for their advanced tech is really strong.
Okay, that makes sense. So higher margins, did that carry through to operating margin as well?
It sure did. GAAP operating margin was 30.5%, non-GAAP 30.7%. Both up that same 1.7 percentage points compared to last year.
Nice consistency there. And the bottom line, earnings per share.
Even better, actually. They hit record GAAP EPS of $2.63. That's a huge jump, up 28% year over year.
28%.
Yeah. And the non-GAAP EPS was also a record at $2.39, which is still up a very healthy 14%.
So what's behind that big EPS jump? Just the revenue and margins?
Those are the main drivers, yeah. But also, share repurchases helped. They've been buying back their own stock, which boosts the per share numbers.
Right. Standard practice, but always good to see. And how's the cash situation looking? Did they generate much?
Decent amount. $1.57 billion in cash from operations for the quarter.
Okay. And what are they doing with that cash?
Putting it to work, mostly giving it back to shareholders. They returned $2 billion total.
$2 billion. How did that break down?
Let's see. $1.67 billion went to buying back shares, like we mentioned, and then $325 million was paid out in dividends.
Okay.
And they also bumped up the dividend per share by 15%. That's a pretty strong signal of confidence in future cash flow,
Yeah, a 15% hike is definitely a statement. Okay, so financially, Q2 sounds, really quite strong. Record EPS, good margins, solid cash return.
Agreed. A very solid quarter overall.
So now let's look ahead. What are they saying about the market? What's the outlook?
Well, the CEO, Gary Dickerson, basically said that despite all the economic uncertainty swirling around, they're not really seeing any big changes in demand overall.
Interesting.
Yeah. He emphasized that their customers are super focused on getting, the next big thing, the really transformative tech, out the door first.
And let me guess, that transformative tech has a lot to do with AI.
You got it. AI came up again and again. It's seen as the most transformative technology right now.
So how does it translate for Applied Materials specifically?
Dickerson's point was that AI needs huge leaps in computing power and, importantly, energy efficiency. And meeting those demands is fundamentally reshaping how chips are designed and made.
Reshaping the roadmap, essentially.
Exactly, which leads to shifts in where the money's going, the wafer fab equipment spending.
Okay, so where are those shifts happening?
They're expecting significant growth in spending on leading-edge foundry logic and DRAM gear in 2025. That's the really advanced stuff.
Right.
But on the flip side, they see spending in China going down a bit for DRAM and mature logic.
Okay. Any other shifts?
Yeah. NAND. Investment there had been pretty low, but they're seeing an uptick now. People upgrading their NAND flash memory capacity.
So the focus is really shifting towards the high end, the leading edge, and Applied feels well positioned for that.
Absolutely. They point to all these major technology shifts or inflections happening right now. Things like IoT, automation, EVs, clean energy, and underpinning it all, AI.
Right.
And technically, they mention specific things like Gate-all-around
And
transistors.
that's the new transistor structure, right?
Yeah, exactly. And backside power delivery, next-gen DRAM, like
Yeah.
4F2 and 3D DRAM, advanced packaging, compound semis, silicon photonics, a whole list of complex stuff.
Okay, lots of buzzwords there, but the bottom line is these new technologies need their specific tools and know-how.
Precisely. And these shifts actually mean more potential revenue for them. They gave an example. For advanced logic, using gate-all-around and backside power, their revenue opportunity is like 30% higher than it was with the older FinFET tech.
Wow, okay. That's a concrete example of how these inflections help them.
Definitely. And another one, they expect revenue from their advanced DRAM customers to jump by over 40% in 2025.
40%. Why so much?
It's driven by the ramp-up of DDR5 and especially high-bandwidth memory, HBM. Both are absolutely critical for AI servers and systems, so that huge growth forecast really underlines the AI demand pull.
That's a massive number. And are there specific products getting picked up for this?
Yeah, they highlighted a couple of wins. Their Sim3 Magnum etch system, for instance, it's brought in over $1.2 billion in revenue just since February 2024.
Whoa.
And also their cold field emission E-beam technology. So yeah, it seems like their new tools are hitting the mark.
Okay. Now, we can't ignore the elephant in the room, trade restrictions. How are those impacting Applied Materials?
They acknowledged it. Dickerson said they did underperform the market in China in 2024 because of the restrictions. But importantly, outside of China, they actually grew faster than their peers in those key leading-edge foundry and DRAM segments.
Ah, okay. So it's a mixed bag depending on geography and segment. What about services?
Restrictions hit the service business in China, too. But despite that, their core parts and services revenue actually grew in the low double digits in 2024, and they expect that to continue this year.
So the core service business is resilient.
Seems like it. And they're also pushing more towards subscription-based services. That's over 2/3 of the service revenue now, which gives them more predictable income.
Makes sense. Okay, so navigating the restrictions, finding growth elsewhere, building recurring revenue. Let's break down the Q2 performance by segment. How did semiconductor systems do? That's the biggest one, right?
Right. It brought in $5.26 billion, up 7% year over year. Growth there was really driven by that leading-edge foundry logic demand we talked about.
Okay. Any weak spots in that segment?
Yeah, they saw declines in what they call ICAP-PS nodes. It's more mature tech for IoT, communications, auto, power, sensors. And DRAM was also down a bit within the segment view for Q2.
But NAND was up.
Yeah, NAND upgrades provided some growth there. And the segment's non-GAAP operating margin was pretty healthy at 36.4%.
Got it. Okay, next up, Applied Global Services, AGS. How did the services arm do?
EGS revenue was $1.57 billion. That was only up about 2% year over year.
Only 2%. Why the slower growth there?
Well, like we discussed, the core services business did grow well, but it was offset by lower sales of their 200-millimeter equipment. That's for older wafer sizes and also that impact from the China trade restrictions.
Right, the headwinds we mentioned.
Exactly. The non-GAAP operating margin for AGS was 28.5%. But they did stress that the core AGS business, if you strip out the 200-millimeter equipment part, actually had a record quarter.
Ah, okay. So the underlying service demand is strong.
Yeah, and they expect that core part to grow low double digits for the full year.
Okay. And lastly, the display segment.
Display brought in $259 million in revenue. Non-GAAP operating margin there was 26.3%.
All right, so that covers the Q2 segment breakdown. What about the guidance for the next quarter, Q3?
Okay, for Q3 outlook, they're targeting total revenue around $7.2 billion. But they gave a wider range than usual, plus or minus $500 million.
Wider range. Why is that?
They pointed to ongoing macro volatility, just more uncertainty out there. But at the midpoint, that $7.2 billion is still about 6% growth year over year.
Okay, 6% growth expected. And earnings.
Non-GAAP EPS is forecast at $2.35, plus or minus $0.20. At the midpoint, that's roughly 11% growth compared to last year's Q3.
Still projecting double-digit EPS growth then. How does that break down by segment for Q3?
For semi-systems, they're expecting revenue around $5.4 billion. That'll be up 10% year over year.
And what's driving that?
Mostly an acceleration in leading-edge foundry logic, especially that gate-all-around build-out. They think that'll offset lower spending in ICAP-PS. Plus, they see a stable DRAM market and continued NAND upgrades.
Okay. And AGS for Q3?
AGS revenue is expected around $1.55 billion. That's actually down about 2% year over year.
So those headwinds are still biting.
Yeah, seems like it. The China restrictions and the lower demand for 200-millimeter gear are still impacting the overall number, even though the core services part is growing.
Gotcha. and display.
Display projected around $250 million.
Okay. Any guidance on margins or expenses for Q3?
Yep. Non-GAAP gross margin expected around 48.3%. Non-GAAP operating expenses about $1.3 billion. And they're planning for a tax rate of roughly 13%.
Okay, thanks. That gives us a clear picture of the numbers. Let's shift gears a bit to the non-financial stuff. What was the general vibe, the tone from management on the call?
Pretty confident, I'd say. Both Dickerson and the CFO, Bryce Hill, sounded very assured about their position. They kept coming back to how Applied is set up to really benefit from AI driving semiconductor growth.
Right.
And they also stressed their ability to handle the unpredictable economy, pointing to their global supply chain and diverse manufacturing footprint. Dickerson kept using the phrase high-velocity co-innovation with customers.
High-velocity co-innovation sounds like they're emphasizing partnership.
Yeah, working really closely and quickly with chip makers on the next big thing.
Makes sense. And what about their core strategy? What did they emphasize there?
It seems to boil down to a few key things. First, really zeroing in on those big technology inflections we talked about, GAA, backside power, HBM, advanced packaging. That's where the opportunity is.
Right.
Second, gaining share in advanced logic and DRAM, the big growth areas. Third, keep growing that services business, especially the subscription part for recurring revenue. And finally, just focusing on efficiency and pricing to keep margins healthy.
And the R&D investment, like the EPIC Center, fits into that first point, right? Staying ahead on tech inflection.
Exactly. It's fundamental to their whole strategy.
It's always interesting to hear what the analysts focus on in the Q&A. Any key themes or tough questions?
Oh, yeah, definitely. Stacey Razgon from Bernstein really pushed on the AGS segment, wanting more detail on the China impact and the 200-millimeter weakness. Bryce Hill had to kind of clarify the core growth versus the headline number.
Okay. What else?
Vivek Arya from BofA asked about their ICAP PS exposure and how they stack up against competitors there. CJ Muse from Cantor focused on gross margins, wanting to know if they can keep improving.
Margins are always a hot topic.
Sure. Melissa Weathers from Deutsche Bank asked about geodynamics, the regular cycles, versus the big HBM growth from AI. Harlan Sur at JP Morgan wanted to know about the timing, the acceleration of leading-edge spending.
Yeah, when does that really kick in?
Right. And Chris Thankar from TD Cowen asked about competition in ICAP and also about Applied stake in BSI, another equipment company. So analysts were definitely digging into the details, particularly around services, margins, and the timing of that leading-edge ramp.
Good questions. Okay, so wrapping things up, if you had to list Applied Materials' key strengths right now, what would they be?
Well, the strong Q2 results, especially that record EPS, are a clear strength. Their leadership in key growth spots like leading-edge logic, advanced DRAM, and packaging. The growing recurring revenue from services is a big plus.
Anything else?
Yeah, they seem to be managing the tricky supply chain and trade situation effectively. And that focus on co-innovation suggests they're tightly linked with their customers' roadmaps.
Okay. And on the flip side, what are the main weaknesses or challenges?
The big one is definitely the impact of the China trade restrictions, hitting both equipment and services. The slowdown in 200-millimeter equipment demand is also a drag on the AGS segment right now.
Right.
And just generally, while they're growing well outside China, the fact remains they underperformed in that specific market last year because of the rules.
Yeah.
Something to watch.
Okay, makes sense. So to pull it all together then, what's the main takeaway from this deep dive?
I'd say Applied Materials put up a really strong Q2, clearly benefiting from high demand for cutting-edge chips, especially driven by AI investment. Their Q3 outlook points to more growth, though they're definitely feeling some headwinds in services from China and that 200-millimeter slowdown.
But strategically?
Strategically, they seem really well placed. They're right at the heart of these major long-term trends in AI, advanced computing, and memory.
All right. And that brings us to our final thought for you, the listener. As chip manufacturing gets more and more complex and AI and advanced packaging are really pushing that complexity, think about how that might cement Applied Materials' role even further. They're kind of the essential supplier, right?
They're definitely critical.
So consider how that central role might evolve, but also what could potentially disrupt that. Could it be new technologies, geopolitical shifts, maybe new competitors challenging their position down the road? Something to chew on.
Good points. And just quickly before we finish, they mentioned a couple of upcoming events. Gary Dickerson's speaking at the Bernstein Conference on May 29th.
Okay.
And Bryce Hill will be the BofA Tech Conference on June 4th. And of course, a replay of the earnings call is up on their investor relations site if you want the full unedited version.
Great. Thanks for joining us for this deep dive into Applied Materials.